All right, guys, let's quickly go over the lines in the sand for crude oil on Friday. Um, if you remember, you've been following me for a while, you understand these lines in the sand and what they mean. That the thicker the line, the more prevalent that area is going to be, and the harder it is going to be to either break through it or the more prevalent it will become as support or resistance. And I just want you to notice a couple of things here on oil. I want you to notice, first of all, we had this thick red line in the sand, right? Which is an area that a ton of traders got short, right? So what ended up happening in the regular trading session? I mean, it was, they just could, the bulls could not get control of this market. Every time we would try and break through where all those shorts were put on, the shorts would defend it with a vengeance. Now, that really isn't what I'm trying to get at mostly in this video. What I want you to notice is once we failed completely and then came back and attempted a feeble retrace and still couldn't do it, that's when the waterfall decline began in the price of crude. But you can see we came up to, well, we broke through it how many times? 1, 2, 3, 4, 5, 6, 7, 8 times we broke through it. And then if you count how many times we came up into it, I mean, this is only what, a 4 cent range. So we knew this still is going to be the major roadblock for higher prices on crude, which I don't see us getting. Um, over the not too distant future. Yeah, I think oil is going to continue to decline along with equity prices. But I want you to notice something else. Remember the blue lines that I was talking about? And if you don't remember, go back and look in the videos. I'm not going to go through all of this now because I want to try and keep these videos as brief as possible so that I'm not taking up too much of your time. But what did we do? We came down to that blue area, right? We rallied right back up to where all those shorts were put on, came down to the blue area again. This time we broke it by a significant margin, came back up, tested, and then we had the decline. So let's see. You can see I've gotten a lot of questions too about what happens if you got a line in the sand like this green one right here, and you just whoosh, blow right through it. Just go through it like a hot knife through butter. I mean, we went through, we came down, we came close to hitting that green line, but then when we finally went through it, it was like a hot knife going through butter. Well, that's no longer a valid line in the sand. I would just take that off my chart completely. But if you notice, I mean, we went through that like a hot knife through butter, right? And then what did we do? We came back up here to where all these shorts were put on, and we came back down. Then we came up, and this is the bulls trying to get control of this market, and they can't. So the bulls really tried here, right? We came, remember, this is green, and this is not only green, it's dark green, which means there are a ton of longs that were put on in that area. So they defended it, right? Broke through it, nope. Broke through it, nope. Broke through it, nope. So they were trying in vain to stop it right there, and they could not do it. Another very bearish sign. So as the day progressed, you also noticed the 33 here. What's it doing? I mean, that's just telling you sell rallies, sell rallies, sell rallies. That's the steepness of that 33. That's exactly what that's telling you to do, is that this thing has no legs whatsoever to the upside. So you can see these lines in the sand continued to be a play. We came down to this area, which was the institutional value area, where you got the green, the blue, and the red, and we stopped, right? The bulls tried to regroup. They could not muster anything. So ultimately, we came down to where all these longs were put on, and the bulls finally had enough. The bulls finally said, you know what? We're just going to throw so much money at this thing that it has no choice but to go back up. So, and you know, this is right in the vicinity of all this blue here too. So this area we knew ahead of time. And remember that these lines in the sand are known ahead of time. These are not put on the chart as the trading day is moving forward. These lines are known in advance. So we know what areas to look for specific points that either bulls and bears are going to defend or fail on. And that is the whole key, as I had expressed in numerous other videos, is you need to get in the frame of mind of being a bull or a bear and looking at these areas and kind of saying to yourself, well, let's see, if I was a bull and I was long from this point and I've come all the way back down to it and it was profitable and now I'm just breaking even, what are you going to do? Well, you're going to bail, man. I mean, you're gonna get out of that thing at break even. You're gonna kick yourself in the ass for not taking profits when you had it. And so, with that mindset, that's exactly what all the other participants are thinking too, or the vast majority, because so they're gonna sell with both hands. So that's why those lines in the sand ultimately work so well, is because they are psychological points of make or break. In these guys' minds or gals' minds, that they need to do something, they need to act. So ultimately, we came down to that line in the sand, came back up to the institutional value area, and that's kind of where we closed. But I'm definitely not real bullish on oil right now, and certainly not equities. I think next week could be pretty bad, ugly for equities. But I told you, I posted on the Facebook. Let's see if I have it up on my board here. It's up on Facebook somewhere. I think I've got October 12th. October 12th should be, that's where time and price come together. So I would expect a low around October 12th. But it could be substantially lower because we're in that negative time frame. Now, this is for equities, mind you. But equities and oil have been in lockstep for over the last 3 or 4 days. And that's another thing I'm going to make a video on, is following other markets in order to follow the market that you're trading. Because specific markets will impact your market that you're trading in a certain way, right? Bonds tend to go opposite. Stocks go up, bonds go down. Oil tends to be opposite of bonds. And gold tends to be opposite of stocks, and so on and so forth. I'm trying to make it as least complicated as possible, but these are also good tools that you need to keep an eye on, is what other markets are doing. Because if you know ahead of time, before going into the trading session, that through the entire overnight session, that the Japanese yen has been leading the equity markets. In other words, every time the yen rallies, the equity markets sell off. And they do that, the equity markets sell off just a smidge after that yen makes its rally. Well, now you know you got a leading indicator. So if you just watch that yen and you get some lines in the sand on the yen and you just watch it, it could be a good tip-off for you that, well, man, they're rallying this yen right now and equities still haven't moved. And all night long, when that's occurred, equities eventually fell out of bed. So I'll make a separate video on that. This video's gone too long to begin with. But take a look at the lines in the sand on crude for today. And if you can tell me in your heart that these things are not phenomenal, then you're on the right track. All right. I will talk to you guys later. Hope you have a good weekend. Gonna hang out with the grandson. He's been with me for a few days now. And I'd like him to just come stay here forever, but I can't do that to his mom. He's my little buddy. All right, later.